Hello and good afternoon. Chris Prinsky, publisher of Financial IT, coming to you live from Money 2020. Truly one of the significant events that we get during the year, and we're in the beautiful host city of Amsterdam, the Netherlands. This event is one that everyone who's anyone needs to be seen at and is seen at. It's an event that is the highlight of the whole European continent when it comes to financial industry. And we're really pleased to be here, and I'm pleased to have my guest, Dimi. Dimi, how are you today?
I'm well, thanks, Chris. It's a pleasure for us being here. My name is Dima Kats. I'm the founder and the CEO of Clear Junction, which is a UK-based financial institution. We are headquartered in London, but we actually have just recently launched an office here in Amsterdam. We also have offices in Poland and in Latvia. And our business is providing financial services to financial companies. So if you think of all the companies here around on this floor, all of them are either our existing clients or our future clients. And we are a service provider to service provider. So we provide payment services to payment businesses.
No, really, really interesting. And the fact that know most of these companies and you're already ingrained in them, I mean, you sound like that you guys are meeting that challenge from behind the scenes.
That's right. Most of the clients of our clients, they never know that Clear Junction supports behind the scenes their business. But I'll tell you what we do is usually in the professional jargon, it's usually called the correspondent banking, right? When there are two banks that work together, that relationship is usually called a correspondent account, right? So that's what we do. We serve other banks, we serve other payment service providers in providing them the correspondent account services. And we do that through catering the transactional banking service and also some treasury services like FX conversion and similar types of services. So that's our business. We've been doing this for about 8 years, I'd say. This is, I think, our fifth or sixth time on the floor of RAI on Money 2020. And we feel like we're not guests here, but we host this whole event. Well, you said some really right things in the beginning, that this is the place where this whole payment industry gets together. And when I walk around here, I just see so many familiar faces. It feels like sort of a club. When you can meet people that you have known sometimes for tens of years. I've been in this industry for 25 years, so I see some people whom I have known for like 20 years. They're still here. We bump into each other every June in Amsterdam, and we all wait for this event just to see what's going on and what has changed for all of us in the different companies that we work in.
Well, Dimi, I quite agree. For me, this is one of the highlights of my year. I'm from the States, so I would say this is my Super Bowl.
Right.
It's like that. But you brought up something very interesting in terms of correspondent banking. So if I understand, you're providing the Vostro and Nostro accounts for financial institutions to be able to work with each other?
That's right. Yeah, that's exactly what we do. We have been doing that since 2017. Now, the correspondent banking sounds like something very very old. I mean, like when you think it's been with us in the payments for tens of years. However, we see that things are actually changing very rapidly. Well, let me ask you: do you feel any smell in the air?
Mm-hmm.
You do.
Yes.
You do. So that's the smell of stablecoins. Which is definitely the topic of this Money 2020. In all the previous years, we heard of crypto, we heard of stablecoins as something as of a promise.
Right.
Today, at Money 2020 in 2025, we see that stablecoins becomes a part of our life, and it seems like it definitely becomes part of the correspondent banking world, especially in for transfers for cross-border transfers.
Right. Right. Well, it's very interesting because, Dimi, last week I was at the Bitcoin conference in
Right.
Las Vegas, which is
Okay.
a huge event like Money 2020 is. And the rising up of stable coins, I mean, one of the issues with crypto has always been lack of regulation, and we're starting to see that come into play. But the usage of stable coins in correspondent banking just seems to make so much sense. How do you manage that?
So we have traditionally worked with other financial institutions. We provided them with the fiat services, and now we see more and more demand from these sometimes very traditional, very down-to-earth financial institutions that, in addition to the fiat services, they also need the services in crypto, or specifically in the stable coins, and they need that. At the moment, the major use case is for them to move their own liquidity from, say, United States or from the UK. They move that liquidity into the destination country where they, I mean, for example, if this remittance companies, they would move the liquidity from the countries where they collect the payments into the country where they would make the disbursements. So they collect in the UK and then disburse, say, in the Philippines, or they disburse in Nigeria. So for moving for those liquidity transfers from the UK into Nigeria, they start using the stablecoin route, which is has recently proved itself as a strong alternative to the very traditional cross-border SWIFT transfers.
Right.
Okay, that's the use case. Chris.
Is the reasons, for example, protection of their funds against the disparity sometimes in currencies, is the reason more about speed and being able to make the transaction?
So yeah, you're making a very good point. So there is a bunch of advantages to making transfers through stablecoins, and a bunch of advantages for to keep using the traditional SWIFT transfers. Okay, and every company decides whether these advantages are significant enough for them or not. I can tell you that it seems like the major change in the recent years that seems to become less risky to use the stablecoin path. In the past, it sounded very much out of this world. It
Right.
sounded very much very risky and too adventurous, if you will. It seems like now the stablecoin becomes much more of a common solution. It's within the consensus, so it's easier for the companies to opt into using the stablecoin route, and it becomes less risky. Now, besides being less risky, in many cases it's much faster. And in some cases, it's also cheaper. And there are opinions. Some providers would say that SWIFT transfers are more expensive. Some would say that stablecoins are more expensive. It depends on the network that you use, and depends on the specific providers that are involved. But
Jimmy, you mentioned something that I think is very important in the financial community. The financial community really is not about managing money. It's about managing risk. Right. And you brought up that as an aspect. And yeah, I think, just a few years ago, this whole space, crypto, stable coins, even central bank digital currencies, all sounds and looks extremely risky.
Right.
So how do you manage that challenge today?
So that's what we see. There is a major change in the market there is a major change of how the market sees that risk, and there is a major change in how the market views the cryptocurrency. So 10 years ago, it was a big no. Now it changes, and people start believing that there is some future in the crypto, and there are some people who believe that this future is here and it's now. Okay, now our job, we provide the correspondent account services. Our job is to provide the range of the options to our clients, and they decide what they want to do. If those of them who believe in using SWIFT, they use SWIFT. Those of them who believe that crypto is reliable enough now, so they start using stablecoins. My prediction is that when you and I sit here in 12-month time,
Yes.
there will be even more consensus around using the stablecoins for the cross-border transfers.
So, based on what you've seen already and what you believe in going forward, the growth is really going to come more from the stable coin side.
That's what we expect. Definitely, yes. Yeah, we cautiously bullish on that,
Okay.
if you will.
Now, how much of that does regulation impact right now?
Well, the regulation helps with changing the attitude, with changing the view on crypto. In the past, there was no regulation, so it looked like Wild West.
Yeah.
It changes now. There is we know what regulators think about it, so it helps. There are some regions where there is a great deal of regulatory clarity. So, for example, that's Europe. There are some regions where we know that the regulator selected be not as prescriptive as in Europe. So, for example, in the United States,
Right.
we see that on the federal level, they are trying to be much friendlier to crypto than in the past, and much friendlier to stablecoins than in the past. We see that in the United States, it seems like the state regulators, they have stepped up to see where the federal regulators give more freedom. The state regulators, they start becoming more active to make sure that some really bad things don't happen. Okay, we see that in the UK there is lots of work in the progress to bring very well developed regulation into the market. Okay, so we see that the regulators, yeah, they definitely they haven't been they've been very active in their thought process on how exactly they want these markets to be regulated, so that they can, on one hand, to ensure that the financial infrastructures are secure, on the other hand, to make sure that the consumers are safe,
Right.
and on the third hand, if you will, to make sure that the industry is well supported to bring this all these innovations into our lives.
Well, Dimi, I'll tell you, from Clear Junction, what you're able to do for your customers, especially going into this brave new world of the stablecoin and everything, I think is really exciting.
Thank you.
And really, we wish you the best success going forward. Thank you very much for spending some time with us at Financial IT.
Thank you very much. Thanks, Chris.